All right, let's jump into this deep dive exploring the world of trading psychology. We're going to be looking at Trading in the Zone by Mark Douglas. This book, it really digs into the mental game of trading, all that stuff that goes way beyond charts and strategies. And get this, it suggests that your success as a trader might depend more on mastering your mind than it does on predicting the market. Pretty intriguing, right?
Yeah, sounds fascinating. I'm ready to dive in.
So right away, Douglas kind of throws this paradox at us. He says that while individual trades, they have these random outcomes, right? You can't know for sure if any single trade is going to be a winner. But then he says consistent success over time, it has the possible. So how does that even work?
Yeah, that's a good question.
It's kind of like, say you could predict the unpredictable.
Right, well, it's not really about predicting each trade. Think of it this way. Douglas, he compares it to the Earth and the Moon, right? Both are celestial bodies. But, I mean, they're vastly different. Anyone can make a trade, but consistent winners, they've mastered their mindset, they approach things differently.
So I think a lot of people, myself included, we get caught up in that search for that one perfect system. That like holy grail, that guarantees wins. Are you saying that's a fool's errand?
Pretty much, yeah. Consistent trading, it's less about finding a perfect system,
Yeah.
and it's more about having a solid approach and mastering your psychology. It all starts with understanding the power of beliefs.
And that's where that story about the guy giving away free money comes in, right? Who wouldn't take free money. But Douglas, he describes how most people on a busy street,
Just walked right past him.
it's hard to believe.
Yeah, it's mind-boggling, but it just shows how deeply ingrained our beliefs can be. Those people probably had such a strong belief that there's no such thing as free money, that they literally couldn't see the opportunity
Uh,
right in front of them.
it's kind of scary when you think about it.
Yeah.
So how does this belief thing, how does it apply to trading? I have a feeling you're going to tell me it's not about blaming the market for losses.
You got it. Let's say you go into trading with the belief that, like, the market is rigged, or I'm just not lucky. Well, those beliefs are going to influence your actions, and chances are you're going to end up confirming those beliefs, even if they're not true.
Okay, so how do we rewire our brains for trading success? Does Douglas give us some kind of mental cheat code in this book?
Well, not exactly a cheat code, but he lays out 5 fundamental truths that are key to developing a winning trader's mindset.
Okay, hit me with truth number 1. Let's get this mindset upgrade started.
All right, truth number 1 is that anything can happen. This doesn't mean that trading is total chaos, but it does mean accepting uncertainty as a core element.
So even with the best analysis and a solid plan, you're saying I need to be okay with the fact that I could still be wrong.
Exactly, yeah.
Honestly, that's kind of freeing to hear.
That leads us to the second truth, which might seem counterintuitive. You don't need to know what's going to happen next to make money.
Wait, hold on. If I don't know what's going to happen, how can I possibly make money? I need you to break this down for me.
Okay, sure. It's about shifting your focus. Instead of trying to predict every market move, which, let's be honest, is impossible, you focus on managing your risk and having a system with a statistical edge, like a casino.
Okay, casinos are in the business of making money, and they don't try to predict the outcome of every spin of the roulette wheel, right? So are you saying traders should think more like casino owners?
Yes, exactly. And that brings us to the third truth, which goes hand in hand with that casino analogy. There is a random distribution between wins and losses.
So even with an edge, there's going to be some randomness. You could have winning streaks, losing streaks. It's all part of the game.
Right, exactly. You got to focus on the long game. The fourth truth kind of builds on that idea. An edge is nothing more than an indication of a higher probability of one thing happening over another.
Hold on, let me make sure I'm getting this. So even if my analysis gives me what I think is a solid edge, a high probability of winning, it's still not guaranteed win.
That's exactly right. No edge is perfect.
Yeah.
And understanding that helps you manage expectations and avoid getting too high or too low based on the outcome of any single trade.
Okay, last but not least, give me truth number 5. What's the final piece of this trading mindset puzzle?
Every moment in the market is unique, meaning just because a pattern worked in the past doesn't mean it's guaranteed to work again.
So the market is always changing, evolving. So basically, we need to be adaptable, stay open to new information, and be ready to adjust our approach as needed.
Right on. These 5 truths, they provide a framework for approaching the markets. But then the question becomes, how do we put these truths into action? Well, Douglas goes deeper into that by explaining the importance of self-discipline and taking responsibility for your trading results. This might sound simple, but it's something a lot of people struggle with.
Yeah, I can see how that could be tough. It's easy to blame the market, right? Or make excuses when trades go bad. So what's the secret? To developing this self-discipline and actually taking responsibility. It sounds a bit like a character-building exercise.
It does have an element of that, you know? And to illustrate this point, Douglas, he shares a story about his own experience training to become a runner. He had to overcome a lot of limiting beliefs and develop self-discipline to achieve his goal. What struck me about this story was how relatable it is to trading.
Yeah, I'm curious about that. What specifically resonated with you about his running story?
Yeah.
How does that connect to what we're talking about with trading?
Well, he talks about how, he wanted to run 5 miles, but his mind kept coming up with all these reasons why he couldn't do it. It's so similar to the mental barriers we create as traders, like when that voice in your head says, maybe I should wait for a better entry point, or this trade feels risky, I should get out now. Even though your plan says something else, it's about pushing past those mental roadblocks.
It sounds like he's saying we need to train our minds for trading, the same way an athlete trains their body for competition. So how do we apply that to our trading? What are the practical steps to develop this kind of discipline?
Well, Douglas emphasizes the importance of having a well-defined trading plan. This plan should include your edge, your risk management rules, and a clear profit-taking strategy. Having these things defined in advance, it helps you stay disciplined and avoid those impulsive emotional decisions.
So it's about taking emotion out of the equation as much as possible. Make a plan. Stick to the plan. That makes sense. It sounds like the thinking like a casino idea is going to be important here, too.
Absolutely. The casino analogy, it helps illustrate the power of probabilities and a systematic approach. We'll dive deeper into that in the next part of our deep dive.
All right, we're back and ready to explore this thinking like a casino idea. I'm curious to see how we can apply this to the unpredictable world of the markets.
Yeah, it's a fascinating concept, thinking like a casino owner. It's all about understanding and utilizing the power of probabilities and having a systematic approach.
So let's break that down. Casinos have that edge built into their games, right? But how do traders create a similar advantage when it seems like anything can happen in the markets?
Right. You're right, the markets seem random, and any single trade can go either way. But that's exactly where the casino mindset comes in. You see, casinos, they don't try to predict the outcome of every individual spin of the roulette wheel or every hand of blackjack. They focus on having a system, a set of rules. That tilts the odds in their favor over the long run.
Okay, I'm starting to see the connection here. So for traders, this system is our trading plan, right? The one we were talking about earlier, with our edge, risk management rules, and profit targets.
Exactly. And just like a casino owner, you need to trust that your system, if it has a statistical edge, will play out in your favor over time. You can't get caught up in the emotions of winning or losing on any individual trade.
That makes sense, but let's be honest. It's easier said than done, right? Trading can be an emotional roller coaster. Fear, greed, doubt. Those emotions can really mess with your head, even when you have a solid plan.
Absolutely. You're absolutely right. Those emotions are part of the game, and they're often amplified because we're dealing with real money and the possibility of both profits and losses. But remember what Douglas emphasizes: consistent trading success. It's all about managing your emotions, not eliminating them.
Okay, so how do we do that? How do we tame that emotional beast within and stop letting fear and greed dictate our trading decisions?
It goes back to those 5 fundamental truths we talked about earlier, especially the idea that anything can happen in the market and that an edge is simply a higher probability, not a guarantee. When you truly internalize these concepts, you start to view losses differently. You stop taking them personally and see them as just a part of the process.
So instead of getting all freaked out when a trade goes against us, we should view it as feedback, as data that helps us refine our system.
Exactly. Every trade, whether it's a win or a loss, provides valuable information.
I like that perspective. But I think what trips a lot of people up, including myself sometimes, is this feeling that you need to be right all the time to be a successful trader.
Yeah, that's a common misconception. And it's a dangerous one, Douglas. He makes it very clear that you don't need to be right all the time to make money in the markets. In fact, focusing on being right can actually be detrimental to your trading.
So instead of trying to predict every market move, we should focus on managing our risk and letting our edge play out over time.
Precisely. Think back to the casino analogy. The casino doesn't win every hand or every spin, but they're consistently profitable because their games are designed with a mathematical advantage.
Okay, I'm getting it. But how do we find our edge in trading? It feels a little more elusive. than the house edge in a casino game.
That's where your chosen method of market analysis comes in, whether you're a technical trader, a fundamental trader, or a combination of both. Your goal is to identify those recurring patterns in market behavior. That suggests a higher probability of price moving in one direction versus another.
So it's about spotting those subtle hints that the market is giving us, those telltale signs that particular setup is more likely to result in a profitable trade.
Yeah, and once you've identified those patterns, you can define your entry points, your exit points, your risk management parameters, and your profit targets. You're essentially creating a trading plan based on those probabilistic clues that the
Thanks.
market is leaving behind.
This is making a lot of sense. But let's get real for a moment. Even with a solid system and a good understanding of probabilities, I think a lot of us still struggle with those emotional impulses. Like chasing a trade after a string of losses, or holding on to a winner for too long, hoping it will keep going up.
Sure, that's completely normal. And Douglas, he addresses this head on in the book. He explains that those impulses, they're driven by our hardwired instincts to avoid pain and seek pleasure. In the trading world, losses can feel like pain, while wins trigger that dopamine rush of pleasure.
So it's like our brains are working against us in a way. How do we overcome those instincts?
It starts with awareness. The more we understand how these instincts influence our decisions, the better equipped we are to manage them. And remember, Douglas suggests that our beliefs play a significant role in how we perceive and interpret information, including market data.
Okay, we've talked a lot about beliefs, but I'd love to hear a concrete example of how a belief can impact trading decisions.
Okay, sure. Let's say you have a belief that the market is always right. Sounds logical on the surface, right? But if you hold on to that belief too rigidly, it can prevent you from cutting your losses. When a trade goes against you,
I can see that. You might think, well, the market must know something I don't, so I'll just hold on and see what happens,
yeah,
even though your stop loss is telling you to get out.
exactly. And that kind of thinking can lead to bigger losses than you initially anticipated. Or let's say you have a belief that big rewards require big risks. This might lead you to over-leverage, taking on more risk than you can handle emotionally or financially.
So it's not just about having beliefs, but about examining them, understanding how they might be influencing our trading decisions, and then challenging the ones that aren't serving us.
That's the key. It's about becoming aware of your beliefs and replacing the limiting ones with beliefs that support consistent success.
This is all great in theory, but let's get practical. What are some concrete steps we can take to start identifying and shifting those limiting beliefs? Give us some actionable advice.
One powerful technique is journaling. After each trading day, take some time to reflect on your trades. Write down your thoughts, feelings, and any beliefs that might have influenced your decisions. Think of it as becoming a detective of your own mind, looking for clues to understand what's driving your behavior.
Okay, so we're journaling, looking for patterns in our thinking. And then what? How do we actually change those deep-seated beliefs? It feels like they're hardwired into our brains.
It might feel that way. But remember, beliefs are simply thoughts that we've repeated so often that they've become automatic. The good news is that we can create new neural pathways by consciously choosing to think differently.
So it's about rewiring our brains for trading success.
You got it. And it takes time, effort, and consistency. But the rewards are well worth it.
This is making me realize that trading psychology is about a lot more than just managing emotions. It's about understanding the underlying beliefs that drive those emotions, and then consciously changing those beliefs.
You're hitting the nail on the head. It's about taking control of your mental game and creating a mindset that aligns with your trading goals. And another crucial concept that Douglas emphasizes is accepting the inherent randomness of the market.
Okay, we've talked a lot about randomness, but I'm still a bit confused about how we can accept something that feels so unpredictable and uncontrollable.
It's about shifting your perspective. Instead of viewing randomness as the enemy, try to embrace it as an essential part of the game. Think about it. If trading were completely predictable, everyone would be a millionaire.
True, there would be no element of risk or reward. It would be kind of boring, actually.
Exactly. And it's the randomness that creates the opportunity for profit. Douglas explains that the market, it doesn't care about our individual trades. It's simply a reflection of the collective actions of millions of traders, each with their own unique beliefs and motivations.
So it's like this giant complex ecosystem where price is constantly fluctuating. And our job is to find our edge within that chaos.
That's a great way to put it. And once we accept that we can't control the market's every move, we can let go of that need to be right all the time.
Okay, so if we can't predict the market, what's the point of all the analysis? Why bother looking for patterns or trying to understand market dynamics?
Analysis is still essential because it helps us identify those probabilistic edges we've been talking about. It's about understanding the market's tendencies, those patterns that suggest a higher probability of price moving in a particular direction.
But those probabilities are never guarantees, right?
Absolutely not. And that's why risk management is so crucial. We need to define our risk on every trade and be willing to accept losses when they occur. Remember, losses are inevitable, but they don't have to define us as traders.
This has been incredibly helpful. So far, we've talked about beliefs, responsibility, self-discipline, and accepting randomness. What are some other key takeaways from trading in the zone that you think are essential for listeners to understand?
One of the most important is the concept of predefining your risk on every trade. This means knowing exactly how much you're willing to lose before you even enter a trade,
So it's like setting your stop-loss order before you even hit the buy or sell button.
taking emotion out of the equation.
Exactly. When you do that, you're making a rational decision based on your predetermined risk tolerance, not based on fear or hope. Okay, that's a great tip. What other strategies does Douglas suggest for managing risk?
He also recommends scaling out of winning positions as a way to protect profits and reduce risk. This means taking a portion of your profits off the table as the trade moves in your favor.
So instead of letting a winner ride and potentially giving back all those gains, you're locking in some profits along the way.
Precisely. And this strategy not only helps to manage risk, but also reduces the emotional pressure of watching a winning trade turn into a loser.
Wow, these are some great insights. I feel like we're building a solid foundation for consistent trading success here, brick by brick.
I like that analogy. And remember, trading psychology is an ongoing journey. It's about constantly refining your mindset, challenging limiting beliefs, and developing the mental resilience to navigate the inevitable ups and downs of the market.
Well said. Now, before we wrap up this part of our deep dive, I want to circle back to something we touched on earlier, this idea of thinking like a casino. We talked about how casinos have a statistical advantage, but there's still that element of randomness. How do those two concepts coexist?
That's a great question, and it gets to the heart of how successful traders approach the markets. We'll explore this in more detail in the final part of our deep dive.
Okay, so we're back. And, I'm really curious to dive deeper into this whole idea of reconciling the randomness of the market with this consistent approach of a casino. It seems almost like a contradiction.
Yeah, I can see why you'd say that. It might seem that way at first glance, but it's actually a key insight into developing a winning trader's mindset. Douglas, he explains that the successful traders, they're able to hold two seemingly contradictory beliefs at the same time. He calls this the two-level thinking model.
Okay, 2 levels of belief. I'm intrigued. Break it down for me.
All right, so the first level, the micro level. It's all about embracing the uncertainty of individual trades. At this level, you have to accept that anything can happen, right? You can't predict with certainty whether any single trade will win or lose.
So it's that humbling realization that we just can't control the market's every move.
Exactly. It's about letting go of that illusion of control. Now, here's where it gets interesting. The second level, the macro level, that's where we shift our focus to the bigger picture, to the outcome over a series of trades.
Okay, so at the macro level, we're thinking about the long game.
Precisely. At this level, we believe that if our trading system has a statistical edge, the outcome over a series of trades will become more predictable.
So it's like flipping a coin, right? We can't predict if any single flip will be heads or tails. But over 100 flips, we can be pretty confident that the results will be close to 50-50.
Yeah, that's a perfect analogy. It's the same principle with trading. Even if your system has a slight edge, let's say a 55% win rate, well, over 100 trades, those probabilities should play out in your favor.
Okay, I think I'm starting to get it. So it's about thinking like a casino owner, right? Who knows that the house edge will prevail over time, even though there will be fluctuations in the short term?
Exactly. And this is where discipline comes in. You have to trust your system and stick to your plan, even when you're facing those inevitable losing streaks, or when you're tempted to chase trades, or hold on to winners for too long.
Discipline. There's that word again. Seems like every conversation about trading psychology comes back to discipline.
It's essential. And Douglas, he makes a great point about how, most successful traders, they don't start out with this kind of discipline. They develop it over time, through experience, through making mistakes, and through learning to take responsibility for their results.
That makes a lot of sense. I know for me, it took a while to stop blaming the market for my losses and to start looking inward to see what I could have done differently. It's a process.
It is a process, and one of the key shifts that Douglas highlights is this transition from trying to avoid taking responsibility to actually embracing responsibility for your trading outcomes.
So instead of saying, like, the market was out to get me today,
Hmm.
we need to start asking ourselves, what could I have done differently?
Exactly. When you blame external factors, you give away your power. You miss the opportunity to learn from your mistakes and improve your trading. But when you take responsibility, you empower yourself to grow and develop as a trader.
Okay, so how do we make that shift? How do we go from blaming to taking responsibility? Especially when those losses can feel so personal.
Well, remember those 5 fundamental truths we talked about earlier? Embracing those truths, especially the ones about the randomness of the market and the nature of an edge. Those are crucial for developing a sense of responsibility.
It's about accepting that losses are inevitable, even with a solid plan, and that our edge doesn't guarantee wins. It just increases the probability of winning.
Exactly. When you understand those principles, you're less likely to feel like you're a bad trader when you have a losing trade. You're more likely to view it as just a part of the game.
That's such a powerful shift in perspective. It really takes the pressure off. So what's one final piece of wisdom that you'd like to share with our listeners about developing a winning trader's mindset?
I think it's this: trading success. It's not about finding some magical formula or holy grail system. It's about understanding yourself, your beliefs, your strengths, your weaknesses, and developing a mental framework that aligns with the reality of the markets. It's a journey of self-discovery and self-mastery, and it's incredibly rewarding.
That's beautifully said. So it's not just about becoming a better trader, it's about becoming a better version of ourselves in the process.
Absolutely. And that's what makes trading psychology so fascinating.
Well, this has been an incredibly insightful deep dive into trading in the zone. I feel like I have a whole new set of mental tools to take my trading to the next level. A huge thank you to you, our expert guide, for sharing your wisdom and insights. And to our listeners, remember, the journey to consistent trading success, it starts in the mind. Until next time, happy trading.